Nice to see you, Tom. You know what? It's sort of surprising, everything that we got from the banks, because I thought the brokers and the big American lender type banks, the Wells Fargos of the world, would do the best this earnings season. And it's sort of been the opposite. Weren't they waiting for higher interest rates? What's the problem?
So exactly. So the whole bull case on this group on bank stocks was that we were going to finally start to get revenue growth because interest rates were coming up off of zero and we were going to get a reemergence of loan growth. That, in fact, has been happening. But the change in the macro backdrop along the lines of potential for stagflation, there's some who even think recession is on the horizon. We've got a tough market for mortgage, which we knew. We knew we were going to have a tough comparison in investment banking. So banks with a broader footprint of businesses are the ones that are going to be the most challenged. So we've just had 8 of the top 10 banks already report earnings. Kind of starting now, after the close today, we're going to start to see the SMID-cap, the mid-cap regional banks start to report earnings. These are the companies who don't have a lot of the businesses that are facing lots of headwinds. These are the ones that are more spread dependent. And we think these results are going to start to be different. Believe me, they'll still have some headwinds, but they're going to not carry as much of the challenge as some of the companies you just mentioned that are in a lot of the bigger banks.
I know you've liked the regionals now that's been your call for a little while. My question, Tom, is one of the problems with the bigger banks has been that yes, rising rates certainly helps profits, but not if those rising rates leads to recession or a sharp slowdown. Wouldn't that be the same issue for regional banks as well?
They would. But let's talk about how much has already been priced into the stocks already. So absolutely. So the whole macro theme has changed since year end to now. Right. So the chances of inflation stronger than we all thought. That you were talking earlier about the World Bank taking down growth forecasts. Growth forecasts in the U.S. are starting. So all that's happening. But let me give you something about perception. So actually, I know Bank of America is up 4% today, but the reality is we think the main message out of their conference call was that they reiterated guidance. They actually didn't take guidance up. That's all it took to make the stock go up 4% when the market's flat. That tells you how bearish investors have been on some of these bank earnings. I'll give you another fact. ETFs for the year peaked on February 10th in terms of AUM. The financial services ETFs have lost 10% of their AUM since February 10th. That is an incredible outflow out of this group. And as you know, Sarah, we're in a new world of passive investing. When money decides to flow out of the group, they sell all the stocks, regardless of whether they're well positioned or not for this environment. So our view is we've done the work. We've gotten more narrow on the stocks. And so we are focusing, like I said, on SMID-cap regional banks like Pinnacle Financial, which is reporting earnings after the close today. We like East West Bank, which is reporting on Thursday, and we like Synovus Bank. So now, granted, Sarah, if we get a recession, I don't think these stocks are telling us we're going to have a recession. These stocks will have trouble, as will the whole market. But even if we just get stagflation, I think these stocks are well positioned. The ones I just mentioned.
What about JP Morgan? That's down almost 20% for the year.
Well, look, now, JP Morgan is a terrific company. Will continue to do very well through most cycles, in my opinion. But there are headwinds everywhere. And I even think Jamie had been talking about it. The thing, too, is the largest banks have to mark their bond portfolios to market for regulatory capital. They all just took a big whack in the first quarter. It's coming again in the second quarter. And so that is going to impact share repurchase for the nation's biggest banks. Plus, they're still going to have headwinds in other businesses. So right now, their breadth of businesses is probably working against them a little bit relative to some of these regional banks.